Earlier this month, Nigeria joined other African countries to sign up to the Africa Free Trade Agreement. Well, as the largest economy on the continent, Nigeria's decision to sign the deal was a boost to the pact. However, many still believe a lot needs to be done by the country if it must reap the benefits therein. Well, it is for this reason that Financial Derivatives Company is organizing a special policy dialogue on the African Continental Free Trade Agreement. Bismarck Rewane, the CEO of Financial Derivatives Company, joins us now to tell us more. Good afternoon, Mr. Rewane. Thank you for coming through to us.
Good afternoon, Chimezie.
Now, you are putting up a policy dialogue and colloquium that would be on Monday on the Africa Free Trade Agreement. Why is that necessary, even as Nigeria has signed the pact?
Thank you, Chimezie. What is happening is that Financial Derivatives Company and other stakeholders, including channels, CNBC, Business Day Online, PwC, and others, are putting together this high-level colloquium to discuss, one, the impact of the African Continental Free Trade Agreement, and two, what policies need to be done to optimize that opportunity so that Nigeria can benefit. Nigerians have suffered many times from policies and agreements without having any impact on the ordinary man. And this is why this agreement is different. This agreement, by 2022 and immediately kicking off this year, is going to reduce tariffs by 90%. This is a market that has 1.2 billion people. 1 in every 5 Africans is a Nigerian. And 1 in every $6 produced in Africa, earned in Africa, comes from Nigeria. But Nigeria's trade with Africa is less than 7%. 93% of Africa's trade is with other continents. So Nigeria, more than any other country, and South Africa for that matter, stands to benefit from the economies of scale and the actual things that accrue to regional integration. So this colloquium is going to interrogate and discuss what is it that we need to do. What are the fears that led to the delay? Nigeria, the biggest country in Africa, was the last to sign this agreement. Why? What were the fears? The fears were basically this. 1, smuggling, dumping. Well, what is Nigeria today? Nigeria today is a smuggler's paradise. In spite of all the policies, in spite of everything, smuggled goods are being brandished all over this country, from rice all the way to textiles, to everything. So what we are saying here is that in a free world economy, in an economy where there's going to be competition and comparative advantage, Nigeria must benefit from the economies of scale and move just from exporting primary products of cocoa, sesame seed, oil, and LNG to actually producing and marketing and selling manufactured goods, attracting investments from major corporates like Nestle, like Guinness, like Nigerian breweries, like Promacedo and all of that, to invest in manufacturing capacity and sell the finished products across to other countries in Africa. This is the benefit.
All right, Mr.
One other thing, and which is very important, is the fact that that exchange rate and policies, every transaction, 18% of Nigerian GDP is made up of trade, and every trade transaction has to be settled by payment on a currency. So we have to actually interrogate the currency efficiency of the Nigerian foreign exchange market, which, by the way, is moving in the right direction. But now we want to make sure that we can accelerate that process and ensure that everybody benefits from this, very much of an agreement that we have.
All right, Mr. Rewane. Now, the African Continental Free Trade Agreement aims to unite about 1.3 billion people. You just said that, creating a $3.4 trillion economic bloc that could usher in a new era of development. Now, the president has just nominated his cabinet members, and of course, they are going through their screening. What should be their topmost priority if Nigeria must take advantage of the benefits the AFCTA presents?
The cabinet is going to have to emphasize trade. We have to look at who is going to be in charge of trade industry and investment. Because this economy is going to grow only when investment increases and the multiplier effect on output, which will create jobs. Job elastic sectors have to benefit. monetary policy is going to help, but it is necessary to have a good, what we call an optimal monetary policy, but it's only sufficient when you have the desired fiscal policy, which will drive that process. So you say that we have $3 trillion. Actually, it's about $2.3 trillion GDP for the whole of Africa. In 10 years, that level, that should be at least $10 to $12 trillion for Africa. And the GDP per capita in Africa now, which is less than $2,000, will be at about $8,000 to $9,000 per head in a 10-year period. So that you, I, and every Nigerian out there will have a higher standard of living to deal with our current financial insecurity, deal with our military insecurity, and deal with the kidnapping and ransom and all these issues that we are dealing with today. When there's financial buoyancy, when there's economic prosperity, all these other negative and dysfunctional behaviors will be recessive, while prosperity will be the dominant feature of the Nigerian economy.
All right, thank you, Mr. Rwani. Let's hope that this policy dialogue will actually address some of the issues that you have raised here. Thank you for your time.